In this video, I am going to file ITR-1 for financial year 23-24 and assessment year 24-25. But before filing the ITR, it is very important to know who are the persons who are eligible to file this ITR. So if you are a resident individual and your total income is not more than 50 lakh in a financial year, from these heads which you are able to see on your screen like salary, pension, one house property, other sources income like interest and dividend, and you can also file exempted income in this ITR. So all the income put together, it should not be more than 50 lakh in a financial year, and you are a resident individual, then you are eligible to file ITR-1. So in this video, we are going to file this ITR in old tax regime as well as in new tax regime. But before filing the ITR, if there is a TDS deduction in this financial year, I mean in financial year 23-24, so you should avoid to file this ITR right now, because if there is a TDS reduction, this TDS will be updated in Form 26AS, your annual information statement, TIS, because all these forms are very important to file the ITR. And even when you file the ITR, you should cross-check your annual information statement, I mean AIS, and taxpayer information summary, TIS. Before filing the ITR, it's very important to cross-check all these documents so that there will be no error in filing the ITR and there will be no mismatch. The figures which you are going to file in ITR and the figures which are reported on annual information statement and taxpayer information summary. So let's start the filing of ITR. First of all, you will log in your income tax portal. If there is no login ID, this is the first time you are filing ITR, then you can create this login ID. How you will create? There is already a video in description, you can check. So when you log in the income tax portal, there is a dashboard like that. First of all, you will check your annual information statement before filing the ITR. So you came here in AIS, click on this, then proceed, then after again click on that AIS. Then you can see financial year 23-24, there is taxpayer information summary and annual information statement. Both are same thing. Annual information statement is detailed information and taxpayer information summary is in summarized form. So when you click on taxpayer information summary, you can see there is a salary income, dividend income, sale of securities and unit of mutual funds, purchase of securities and mutual funds. There is more information on this, like that interest income will be there if you purchase the property, and like that there is a lot of information are catching here by the department. So every time when you are going to file the ITR, first of all cross check all the information from this TIS and annual information statement, and after that you will file your ITR. So let's start the ITR. So first, when you came on the dashboard, you can start from there like file now, or you can come here e-filing, then income tax return, then file your income tax return. After that, select assessment year 24-25 online mode, then continue. After that, start new filing, then you are individual, continue. Then select form ITR-1 and then again continue, proceed with ITR-1. Let's get started. And then there are three options are there. Taxable income is more than basic exemption limit. If you are filing the ITR in old tax regime, then your basic exemption limit is 2.50 lakh. So if your taxable income is more than 2.50 lakh, you can select this. And in case of new tax regime, if your taxable income is more than 3 lakh rupees, then you can also choose this option. Besides this, if you have no taxable income more than 2.50 lakh or 3 lakh, you can choose that option where you have already expenditure 2 lakh rupees on foreign currency in the last financial year. Similarly, you have expenditure on consumption of electricity more than 1 lakh rupees. And if there are if you are not applicable on both options, then you can try it third option, others. So I will choose that option because there is income more than 2.50 lakh in old tax regime, and even in new tax regime income is more than 3 lakh rupees. So I will go with that option, first option. Taxable income is more than basic exemption limit. Then continue and then OK this. Then you can see that dashboard. First of all, you will see here personal information, gross total income, total deduction, tax paid and total tax liability. So you have to choose all the option one by one and confirm all the options. First we will start with personal information, then click on that personal information first. Then you will see here profile information where there is last name, middle name, first name, PAN number, date of birth, Aadhaar number, contact details. Then scroll down, most important information, nature of employment. When you click on this, then you will see you are central government employee, state government employee, public sector undertaking employee, Further scroll it down, you are PSU pensioner, state pensioner, other pensioner or other. If you are an employee other than PSU employee or government employee, central government employee, state government employee, then you can choose this option others. If you are a private limited company employee, so you choose option other, then scroll down. Then you will see most important information here. Do you wish to exercise the option under section 115 BAC of opting out the new tax regime? If you want to file your ITR in old tax regime, it means you are going to opt out of new tax regime. So in such case, you will choose yes, because you are going to file your ITR in old tax regime. So if you are file your ITR in old tax regime, then choose option yes. So I will choose yes because I will going to file the ITR in old tax regime. And if you are going to file your ITR in new tax regime, then go with no. Then scroll down, here your bank detail, and then confirm it. So our personal information is confirmed. Now we will go to gross total income. Now click on gross total income. Then you can see here lot of exemption here in salary income. First is expenditure incurred on cost of travel on tour or transfer. Second, are you eligible to claim exemption in respect of special compensatory allowance, children education allowance, hostel allowance. Third, most important, house rent allowance. So most of the employees generally claim this exemption when you get your form 16 from your employer. Then automatically all the information will auto populated here from your form 16, or you can say from the AIS or TIS. So as per section 13A, you have to fill up that figure. Now the important thing is that lot of employees are generally confused in this. They generally mention here if you fill it yes, choose it yes, most of the employees generally fill here the rent which they are actually paid, but this is not the exact formula. The exact formula is least of the three figures which are calculated in section 10 subsection 13A. So how you will get this figure, least figure out of 3? As per this formula, there is already a detailed video on this, how you will calculate the rent exemption. I have already a video on this, and the link of that video is given description. You can go and watch this. Otherwise you will get this figure from your form 16. Then came down, if there is any leave travel allowance, you can put it here. Click it on yes and fill the figure. Any other exemption, then you can click on yes and fill the figure. Then continue. If you continue, देखिए, now there are a lot of exemptions also there, because you are eligible to claim any other exemption from salary income. So there are 6 to 7 options are there. So if you have any exemption under any head, like if you have any death cum gratuity figure, fill the exempted amount here. Click on that box and put the exempted amount. Similarly, if there is exemption of leave encashment, similarly if there is exemption on commuted pension, so if there is any kind of exemption under these sections, you can click on this checkbox and fill the figure here. And on this section also, section 10 subsection tax gratuity, similarly section 10 subsection 10A commuted pension, similarly section 10 subsection 10 AA leave encashment, I have already made a detailed video on all these sections to calculate the exemption amount. So if you are interested to see how to calculate these exemptions, the link of these videos also given in description. You can go and watch this. Then scroll down and then continue it. Then you come on this page where you see your exemption amount is here 40,000 rupees. This is HRA exemption 40,000 rupees. Now you have to fill your gross salary. So what you will do, click on this edit option. Then there is a salary as per section 17 subsection 1 to fill here your gross salary. So it is 5,50,000 in my case, suppose. Then I scroll it down, automatically it will take 40,000 HRA exemption. Then your net salary is 5,10,000 rupees. Then came it down. Then standard deduction is there, because in old tax regime standard deduction is 50,000. Similarly in new tax regime you will also get 50,000 standard deduction from this financial year. So your income chargeable under the head salary is 4,60,000 rupees. Then save it and continue for the next. Then save it. Then you will see your income from salary is gross salary 550, 40,000 is exemption, 5,10,000 is net salary, deduction 50,000 rupees. Income chargeable under the head salary is 4,60,000. Then scroll it down. This is income from house property. Then added detail of breakup. So then you will see type of house property. So there are 3 options are there. First is self-occupied. Suppose you will buy a house or construct a house and you will self-occupied this house, means you are not going to let out that house. Then this option will be choose. So you will choose self-occupied and simply fill the interest payable on the borrowed capital. So whatever the interest amount you have, you will fill that figure there. For this you will get the loan principal, or you can say principal amount or loan amount from the bank. You will collect the loan certificate from the bank, where you get for this you will collect loan certificate from the bank, where you get the breakup of principal amount and the interest amount. Principal amount will be filled up in section 80C, because in section 80C you will get the deduction of principal amount up to 1.50 lakh, and in this section you will get the deduction of interest amount. So I suppose it is 70,000 rupees, but I am not going to choose the self-occupied property. I will choose the let out property. So you will choose let out. So in case of let out, first you have to show the gross amount received on rent. So when you let out the property, you will get the monthly rent. So suppose you will get 10,000 rupees month rent, so total rent is 1,20,000 rupees. If any tax paid to local authority will deduct it, then annual value 1,20,000 rupees. Then there is also a 30% standard deduction from that income. It will auto calculated by this system. So it is 36,000 rupees. Then after interest payable on borrowed capital, it is 70,000 rupees. So your income chargeable under the head house property is 14,000 rupees. So you will add this income also. So you will get on the same page, first income from salary 4,60,000 rupees. Then your income from house property is 14,000 rupees. And then you will come down, then there is a income from other sources. So you will add your income from other sources. So income from other sources means you have any interest income from saving bank account, you have any interest income from deposit in bank, means FD, interest on FD in bank, post office, cooperative society. Do you have received income as income tax refund? So if you have any other sources income, you can fill in this. So I suppose you have a bank interest and FD interest. So you will fill up here bank interest 5,000 rupees and FD interest 25,000 rupees. Scroll it down further, then you came here. If you have any family pension, any other income means if you have a tuition income or any other part-time income, you can fill it here. First click it on yes and then fill the figure. If you have any dividend income, click on yes and then fill the figure. If there is nothing, then left it, then continue. Then you will come on this page, verify your income source detail. First income from salary 4,60,000 rupees. Then scroll down, income from house property 14,000 rupees. Then scroll down, income from other sources 30,000 rupees, and your gross total income is 5,04,000 rupees. Then come down, then there is an option for exempted income. If you have any exempted income, then add another. When you add another, nature of exempted income is there. Select, there are a lot of options. First agriculture income less than 5,000 rupees. Any amount received from the central or state government by way of compensation on account of disaster. Then scroll it down. Then any sum received under a life insurance policy. Similarly, section 10 subsection 11 statutory provident fund. Then section 10 subsection 12 recognized provident fund. Then scroll it down again, any other. So you have any income from any exempted income which you are not getting from the above options, then you will choose any other and then fill here the exact income, like interest and profit earned on relief bonds under section 10 subsection 15. I will fill the description, then the amount 25,000 rupees, then add it also. Then you will also came back on this income, verify your income detail, where your income from salary is 4,60,000 rupees, gross total income 5,04,000, exempted income 25,000 rupees. So friends, exempted income is only for the reporting purpose. This income is not going to add in your gross total income. You will see gross total income is 5,04,000 rupees. This 25,000 income is not added in this gross total income. This is only for reporting purpose, and it is clearly mentioned here. This information is only for the reporting purpose. So this is not going to add your tax liability. Then confirm it. And then your gross total income is 5,04,000 rupees. Then click on total deductions. When you click on total deductions, there are a lot of deductions are there. When you have donate your money, then click on yes. If you have deduction 80 GGC for contribution to political party, if you have donate to political party, then click on yes and fill the figure. If any other deduction, scientific research and rural development. Similarly, most important deduction which is invested by most of the taxpayers, section 80C. This is the famous section where most of the investments are done by the taxpayers, like your employee provident fund, public provident fund, life insurance premium, 5-year tax saver FD, similarly home loan principal, tuition fees, and many more like Sukanya Samriddhi Yojana. So you can claim up to 50,000 rupees. So in this section, suppose I am going to claim rupees 10,000 rupees only. Further 80 CCD2, NPS contribution by the employer, then come back 80D, 80E, 80 TTA. So friends, if you are a person who is not senior citizen, means your age is less than 60 year, so you will get the deduction under section 80 TTA for interest income, interest on saving account. So in our case, we have fill interest of rupees 5,000 in other income, so we will claim that interest amount in section 80 TTA. So click on yes, then the figure will be fill up later, so you will click it yes only. Are you eligible to claim any other deduction? No deduction. Then continue. Then you will see 80C deduction is 10,000 rupees. Then scroll it down, you will see section 80 TTA, interest on saving bank account. So click on 80 TTA and fill the figure of interest amount. The maximum deduction in this account is 10,000 rupees only, and this 10,000 is interest of saving bank account. If there is interest of FD account or RD account, you are not going to claim deduction under section 80 TTA. In section 80 TTA, you are going to claim the interest of saving account only, and it is only up to 10,000 rupees. So in our case, our interest income of saving is 5,000, so we claim all the amount 5,000 rupees. So click on add, then you will see 80C 10,000 rupees, 80 TTA 5,000 rupees. Then scroll it down, total deduction 15,000 rupees, then confirm it. So your total deduction are also confirmed by 15,000 rupees. Then tax paid, click on tax paid. Now you will see TDS is 0. What I said you earlier at the beginning of the video, TDS is updated in the mid of June. So any TDS reduction in this financial year will be reflected here in the mid of June. So scroll down here and confirm this amount. You also confirm this. Then total tax liability, first it will show your income detail. Your gross total income 5,04,000, total deduction 15,000, total income 4,89,000. So in old tax regime, if your total income is less than 5 lakh rupees, so you will get the tax rebate of maximum 12,500. So on total income of 4,89,000, if you apply the tax slab up to 2.50 lakh, there is no tax. 2.5 lakh to 5 lakh rate of tax is 5%, 5 to 10 20, and above 10 is 30. So applying this tax rate on 4,89,000 rupees, your tax liability come out 11,950, because your total income is 4,89,000, which is less than 5 lakh rupees. So whole amount of tax 11,950 you will get rebate under section 87A. So your tax liability is 0. Then come down and confirm it. So you will see your all the tabs, personal information, gross total income, total deduction, tax paid, and total tax liability are confirmed. Then proceed it. Now I will see all these figures in new tax regime. This is old tax regime. Now we will fill all the figures in new tax regime. So first you come on this page, personal information, where you have that option. Do you wish to exercise the option 115 BAC of opting out of new tax regime? No, I don't want to opt out to new tax regime. I want to file this ITR in new tax regime only. So I will choose the option no. Then come down and confirm it. Now you will see your gross total income increased to 5,44,000 rupees. The reason is that first you will see the old tax regime. In old tax regime, your gross total income was 5,04,000 rupees. But when you choose the new tax regime, you will see your gross total income is 5,44,000 rupees. That is why, because in new tax regime, you will not get the exemption of house rent allowance LTA. So in our case, we will put 40,000 rupees as house rent allowance. We claimed the exemption of house rent allowance of 40,000 rupees. But in new tax regime, we are not going to claim that exemption. So our gross total income increased by 40,000 rupees. Now it come to 5,44,000 rupees. So click on this figure first. Now you will see in new tax regime only you will get 3 exemptions only. No HRA, no LTA, nothing. Only expenditure incurred on cost of travel or tour, transport allowance commuted between place of residence to place of duty, and any other exemption. Then continue it. This is your salary 5,50,000. Exempt allowance is 0. You will see there is no exempt allowance. Otherwise, in old tax regime, there was exemption of 40,000 rupees. Now, your income chargeable under the head salary is 5 lakh rupees. Then come down, there is no change income from house property. In new tax regime, if the property is let out, you will continue enjoy the benefit of interest on borrowed capital 70,000 rupees. But if the property is not let out, it's very important. If the property is not let out, if the property is self-occupied, then you will not going to enjoy that interest on borrowed capital. So that is the most important point you have to keep in mind. Then scroll it down. Then interest is 5,000 rupees. Interest on deposit 25,000, 30,000, and then scroll it down 5,44,000. Your gross total income, then exempted income is 25,000. All is same. Then confirm it. Then our gross total income confirm 5,44,000. Then we will come on deductions. When we click on the deduction, you will see there is no 80 TTA deduction. There is no 80C deduction. In 80C, where you can claim up to 1,50,000, and in our ITR in old tax regime we fill the figure of 10,000 rupees. But in new tax regime you are not going to enjoy the benefit of section 80C. You are not going to enjoy the benefit of section 80 TTA, where you have claimed interest amount up to 10,000 rupees. Only this deduction will be eligible in new tax regime. 80 CCD subsection 2 means employer contribution to NPS. Then continue it. Then 80C is 0. You will see 80 TTA is 0. Then come down and confirm it. Then this information is also confirmed. So friends, this is ITR-1 in old tax regime as well as in new tax regime. So you will see the difference. In new tax regime you are not going to benefit of lot of exemption and deductions. So this is the ITR. I hope you like the video. If you like the video, please like, share and subscribe my channel. Thank you very much.